So how you doing? As good as the housing market? The mythical slowdown that multiple people had been talking about has failed to materialize. Rather, as I've suggested, demand continues to be very strong, and there are multiple underlying reasons for that demand. One of them, of course, is low interest rates, but there are other issues as well. And they are propelling this market forward, and that propulsion will continue, and this market will continue to experience strong sales and strong increasing prices. We're not going to continue on a straight line trajectory. That generally doesn't happen for very long in markets. Sometimes we get an uptrend and explosive growth or exponential growth off that trend line. That's usually an indication of some kind of bubble happening and a topping pattern that's going to come into the market. We're not seeing that. Sometimes we see kind of straight line growth going up, and then we see more of a plateauing and leveling off. That's very normal in the real estate market. We're not seeing that yet either. What we're seeing is continued strong demand, continued strong home sales, and continued strong price appreciation. So I am Justin Miller with the Chong Miller Group. At the Chong Miller Group, we help people buy and sell homes. This is the July 2021 real estate market update for Las Vegas, residential, resale, single-family homes. So let's go ahead and get right into the numbers. So remember, we're looking backwards 1 month. This is the market update for July of 2021. We look at statistics for what's actually occurred. So we're looking back to June of 2021, and we're making market comparisons to May of 2021, June to May, month over month, and we're making year-over-year comparisons to June of 2020. So what about sale price? June of 2021, median sale price, $393,750. That's up $10,000 from the $383,750 that we saw in May of 2021. That's 2.6% higher. It's also up considerably from the $323,000. It's up $70,750 from what we saw in June of 2020. That's up 21.9% year over year. Now, year-over-year statistics are generally really helpful in understanding longer-term issues, trends unfolding in the market. I do want to caution you, of course. Last year, we were in a pandemic and a lockdown that had significantly impacted the overall economy as well as the housing market. The bottom of the housing market for some statistics happened last year in April and some in May. So June is actually the first real recovery month, or on some statistics, the second month showing levels of recovery. July, when we look back to July of last year, we're going to see numbers that are a little bit easier to use for year-over-year comparison because we're comparing to things that were growing quickly last year. Anyhow, I do want to point out one other thing as I have the past few months. We are up $53,750 since January. That's in 6 months. We are up 15.8%. That's a really interesting number. I do think that we're not going to be up 31.6 or 32% at the end of the year, but we are up very strongly from the point in time where things started to really reopen across the larger economy, and we started seeing really healthy signals in the housing market. We're up just about 16%. That's going to continue. I'm not sure. This year is obviously a little bit unusual historically, as was last year, so I'm not sure exactly where we'll end up on the year, but I think we're probably going to end up something along the lines of up 20 to 23% in December relative to January. So we'll see what that actually means. By the way, let me just do that real quickly. If we ended up 23% year on year, at the end of the year, we would be at 418,000 at the end of 2021. So kind of interesting. I do think that You know, we're only $6,250 below 400,000. That sort of psychologically interesting number. We will almost definitely crest that in July if something happens not foreseen, not looking this way in the first week of July. But if something happened that prevented it from occurring in July, it would be in August that we'll go over 400,000. By the way, the data are pulled on July 7th of 2021, and so that's why I'm recording this this video. All right, so in addition to looking at median price, we also look at price per square foot on a median basis. Price per foot in June of 2021, $213. That's up 2.4% from $208 in May of 2021, and it's up 24.6% from $171 in June of 2020. Now, I want to note, as I just did with median price, we're up $30 per foot since the start of the year. That's up 16.6% over 6 months. So we do see price per foot still going up slightly more quickly than median price. And that's suggesting there may be some change in the mix of properties that are actually making it through the sales process right now, with some higher end properties transacting and some lower end properties having a little bit more resistance to closing transactions. We do know this anecdotally. We've seen a lot of kind of record pricing occurring in the Las Vegas Valley over the past month, in fact, over the past 2 months, at very high-end properties. In fact, a property was just bought $25 million, record price in the Valley. So the median price is that which half of sales are above and half of them are below. But if we start getting some more at the high end of the market, that would pull the middle number, the middle house, a little bit higher in all likelihood. It certainly pulls the average higher, but it pulls the median a little bit because we see more properties transacting at higher numbers and a little bit less at lower numbers. And that's reflected in the price per foot. Certainly a $25 million home, it's going for a whole lot more than $213 per foot, but it's offsetting, right, that's still at the median, it's offsetting those that might be selling at $80 a foot. All right, so as I'd said before, if price is going up but sales volume is going down, that's a problematic signal, and it means that pricing is less locked in some manner. Well, that's not what occurred in June. We saw 3,462 completed home sales in the month of June of 2021. That's up 11.7% from the 3,099 that completed in May of 2021. It's also up kind of ridiculous 51.6% from what we saw in June of 2020, 2,283. That June 2020, that's the second month we start seeing increasing home sales. In July, we're going to see year-on-year comparison that's much more reasonable in number of sales. But we're up 11.7% from last month. There have been commentators out there on YouTube, in newspapers, et cetera, talking about the market slowing down, people are running out of capacity, they can no longer afford properties. Check out my Ask the Professor video on affordability from June of 2021, from last month, where I addressed the affordability issue head on. We're not seeing this slowdown. The reason that April and May numbers relative to March had slowed down was March was the highest number of sales ever in any single month in the Las Vegas Valley for single family homes. And so a reversion to the mean suggests that we'd slow down from that. But the other thing is we've had an inventory shortage. We haven't had enough houses in the market to be able to sustain very high levels of sales. So in reality, when we get more houses into this market, more houses are selling. And so what we need to maintain high sales volume is more inventory coming in. And we're starting to see that, and I'll talk about that in a couple minutes. I do also want to point out the 3,462 homes that sold in June of 2021, Third highest month in the history of the Valley for single-family home sales. Really, really strong. It's the second highest June in the history of the Las Vegas Valley for home sales. These numbers are incredibly strong. We have on strongly increasing prices. We have strongly increasing sales. It's not going exponential. We don't see a blow off as we come up near a top. We're seeing continuation of a very strong market. All right, let's look at some other numbers. Pending home sales, 3,593 pending home sales. Now remember, pending means they've gone into contract. There's a buyer who wants to buy it and a seller who wants to sell it, and they've agreed. So they've signed a contract, but those houses have to get through escrow to get to the close, at which time they become closed sales. So some pending home sales, most, conclude and they'll be reported next month as closed sales. Usually pendings are 30 to 45 days. There's some exceptions on both ends of that, but most properties close within 30 to 45 days. Some will drop out for various reasons. We'll talk about that in a couple minutes when I talk about back on market. So pending home sales, 3,593. That's up from 3,308 in May of 2021. That's up 8.6%. And it's up 18.9% from a strong recovery month last year, June of 2020. That was the second month of the recovery in volume of actual transactions, and the third month starting to see some level of recovery in pending home sales. And so that number last year was pretty strong. Okay, so we know how many sold, 3,462. We know how many have gone into contract but have not yet closed, another 3,593. How many houses are out there for sale with no offers on them yet? Well, at the end of the month, effectively, we had 3,100 houses for sale. That's down from the end of May, when we had 3,367. It's down 7.9%. It's actually down a whole lot from last year. Remember, the numbers last year are weird. It's down 53.6% from 6,685 homes that were for sale at the end of June last year. We're actually running about half of normal. Last year's number was actually pretty much in line with what we would expect to see for number of houses for sale in the market in Las Vegas during a particular month. Instead, we saw about half that, 3,100. So we're still very tightly constrained on inventory. So let me give you this other number. This is the number of houses that were for sale, active listings, single-family residential, resale, detached homes, here in the Las Vegas Valley this morning on January 7th, as I was pulling all of the data and starting to record this video. That number is interesting in the comparison to what we were seeing earlier in the year, when we were seeing, as I was pulling data to record the videos, numbers ranging from 1,752 single-family homes up to about 1,824 single-family homes. So we are past the acute inventory problem. We are past the nadir, the depths of tiny inventory in this market. We're actually up about 50%, but we're still only half of what we would normally expect to be during this time of year in the marketplace. And so we're still very inventory constrained. So we need to build that new inventory. How do we do it? With new listings, new houses coming into the market. There were in June of 2021, 3,910 new listings. Now that's up 1.4% from the new listings that came in May, 3,856. It's up 24.2% from the 3,147 that came in June of last year. Remember, people last year were hesitant about putting their properties on the market, and there was a little bit of a bulge in inventory because things had been locked down for a while. and was hard to move properties. So the number of, how does it compare? 3,910. It's the best we've seen in new houses coming into the market since August of 2019. Remember, 2019 was actually a really strong year in the housing market. It's the best June since 2011. We've got to go back 10 years, with the exception of June of 2019. So June, July, August 2019, very strong. Other than that little peak in 2019, we have to go back 11 years. Well, I'm sorry, we have to go back 10 years. We have to go back a decade to June 2011 to see a new listings number that's higher than what we saw in June of 2021. So we're definitely getting new listings in the market. We're getting above seasonally normal new listings coming into the market. So we're looking really good there, and we're seeing that impact on number of houses that are actually available for sale at any particular time in this market. And that's really good. It's really helpful. And it's that kind of new entrance into the market that allow for increasing sales to occur. And so as long as we continue to get new properties into the market, we'll get new sales. I'd been saying since I think November of last year that come May or June of 2021, we'd start to see inventory coming back into the market at scale. Not a ton of inventory, not people worried they're losing their homes, they got to sell, but rather we'd start to see people are out of school where virtual learning is harder than in-person learning. And so people would be able to start putting their properties back on the market. We'd be seeing people returning to work and getting their employment situated, and so they'd start feeling more comfortable about themselves looking for homes and therefore putting their existing property on the market. And so we're clearly seeing that now. We're not seeing a dumping of properties into the market. We're not seeing increased foreclosure numbers at any kind of interesting rate. What we're seeing is more people are realizing they can transact their properties both to sell well and to buy what they want. And so they're taking advantage of the environment and returning as home sellers. So that means we're seeing above normal new listings coming into the market, and that's positively impacting inventory, and it's allowing higher numbers of actual pendings and closed sales. We'll continue to see that. I do want to point out, actually, we've achieved a level of new homes coming into the market that exceeds the number of contracts that we've got, and it also exceeds the number of pendings we have. It doesn't exceed the combination of those by any means, but we had 3,462 sold. We had 3,593 pending. We had 3,910 new listings into the market. So that's a really healthy improvement that we're seeing here. One other statistic that I've been talking about recently and I want to highlight here is the number of back on market. Remember from that pending number, the 3,593, not all of those houses are going to close. Some will come back into the market, and they may come back into the market because they weren't appropriate contracts to begin with. A buyer was not able to qualify for a loan. Somebody had a change in circumstance that caused them to realize they cannot engage in the transaction at this time. And also appraisal problems. And appraisal problems are significant. Late last year, we had been seeing significant appraisal challenges in the market, that appraisers were coming in and second guessing the market transactions that were taking place and writing low appraisals. That had largely resolved itself through much of the first half of this year. In June, we've not, at the Chong Miller Group, we've not seen it ourselves, but anecdotally we're hearing from multiple escrow companies and multiple other agents who are seeing appraisals come in low again. It seems that appraisers are more sensitive to the news about how the market's slowing down than the market is actually. And so appraisers have, for some reason, wanted to believe the market's slowing down, and they've been writing appraisals that have been a little bit low. This is clearly not all appraisers, but it's been happening. It's been happening in significant numbers, and it's causing properties to end up falling out of contract and going back on market. It's a problem. There needs to be revisions to the regulations around appraisals to cause appraisers to align or have incentives or align better with the other participants in the marketplace. And so we're seeing some bad appraisals out there, significant numbers of bad appraisals starting to pop up again. The market is not slowing down. Any appraisers who are listening, I'm not criticizing you individually, but no, the market is not slowing down. The market is strong, and if anything, it's actually strengthening. We're seeing significant increases in prices. We're seeing significant increases in sales. We're seeing significant increases in pending home sales, while we're seeing very healthy inventory entry into the marketplace. So I am Justin Miller with the Chong Miller Group, and we help people buy and sell homes. If you're a buyer in this market, know this: there are still many offers being written on many of the properties that are out there. Most of the properties that are out there actually at most price points. So to compete in this market, you need an agent who really understands what's going on in this market to be able to situate you as well as possible in the offers you're making, in the properties you're looking at. If you're a seller, know this: there are properties sitting on market because they've been priced wrong. There are properties that are not getting top dollar because they're not showing well. There are properties that are going into contracts where the contracts then fail, sometimes repeatedly, because the agents are not understanding what's happening. The market is different today than it is normally. And you need to have a listing agent who understands what's going on to be able to position your property as well as possible, to be able to evaluate offers as well as possible, to be able to make sure you get into a contract, that you get through the contract, and you're able to close the contract on the other side. We would love to be able to help you. Please reach out. You've got the number on the screen. You've got our email address. If you're watching this on YouTube, please go ahead and click the subscribe button. And we look forward to talking with you soon. Thank you very much.